So I'd like to welcome our next speakers who are going to be talking about scaling fast and defining new industries, very relevant. And this will be Mr. Brady Fletcher, fresh from the Bahamas, where he gave another talk. He's the Managing Director of the TSX Venture Exchange at TMX Group, and he'll be joined by Sheldon Pollack, Chairman of the OV2 Capital. Thank you.
Well, I guess now everyone knows why I've got a bit of a sunburn. I'm not just nervous up here. I obviously run the venture exchange here, as was introduced, and for me, it's really exciting to be here next to someone like Sheldon, who has built a unicorn in Canada, and I think that's a pretty unique trait for a management team. Building a business is hard. It's really hard, and so to sit next to someone who's successfully done that and now financing in different mechanisms and looking at different structures, hanging out in the Bahamas with me, looking at companies doing ICOs. Would love to kind of get a little bit of your background and thoughts on some of the things you're seeing right now.
Sure. Thanks, Brady. So I guess just as a quick background on myself, I founded a company in 1983. So I guess I'm really, maybe not quite an overnight success in this business, but I founded a company in 1983, grew it to $1 billion in sales, sold it to a private equity firm, sold most of it to a private equity firm back in 2011 and sold the balance in last year. And somewhere along the way, I guess in 2011, I retired for about 5 minutes, realized that wasn't for me, and started getting involved with some early stage companies and tech companies. And so I've invested in them, I try to mentor them, and in some cases I help steward them through the go public process of something of which I've done a number of times. And I guess that's probably one of the reasons why Brady wanted me on the floor here. In terms of companies I'm involved with today that are relevant, probably the most relevant one, given we're at a Fintech conference, is I do sit on the board of VersaPay, and I sit on the board of Acuity Ads as chairman of that company.
Right on. And so VersaPay, Acuity Ads, those are companies that are publicly traded with us on the venture. Tell me a little bit about what's worked for them, what hasn't worked, where the challenge is, what drove it.
Yeah, so I think the first thing I will say that I think is very important for everyone to understand is, irrespective of your method of financing, good companies are good companies whether you're private or public, and bad companies are bad companies whether you're private or public, or whether you ICO or don't ICO. So fundamentally, we're always trying to find good companies. I think the number one advantage, and I know there's a bunch of VCs in the room here, and I too act as a VC, so I'm kind of wearing two hats here, but that does allow me to see both sides. In my opinion, the number one advantage of a public versus private situation is the notion of permanent capital versus temporary capital. I think a lot of young entrepreneurs kind of don't realize when they get that $2 million, $5 million, $20 million, or $100 million check from a VC, that those monies ultimately belong to a fund, and those funds have a lifespan to them. In some cases 5 years, 7 years, maybe a maximum of 10 years. But all the value needs to be created relatively quickly for the entrepreneurs, because it is in fact temporary capital. One of the strategies, frankly, we have with one of the companies that Brady mentioned with Acuity Ads particularly. So Acuity Ads is in the ad tech space. Ad tech got more VC money 7 years ago probably than any other industry out there. You fast forward 7 years, and a lot of those ad tech companies didn't manifest the way that the VCs had hoped for. Instead of building billion-dollar companies, they built $20 million, $30 million, $40 million companies. So what we're doing is taking our permanent capital that we've raised through the public markets, and we're using it to buy out VCs who are, let's call it dissatisfied with the fact they didn't get the next Google. And we see that as a huge competitive advantage,
That's exciting. So when you talk about that, how many acquisitions has Acuity done now?
Acuity has done 3 acquisitions. So, obviously the permanent capital part of it, I think, is the number one thing. The second thing that I think is very important from an entrepreneur's point of view is the fact that in a weird sort of way, you end up with more control than you do through a VC-funded organization. And this is probably not the nicest thing I'm going to say today, but it's sort of true. And that is, would you rather have 1,000 disinterested shareholders or one very interested shareholder? Because that one very interested shareholder could add a lot of value, but sometimes they do prohibit you from taking steps in your organization that you may otherwise want to take. The other advantage, I think, in a public company as an investor is just the level of governance. So governance is a double-edged sword. Many entrepreneurs don't like governance, but I can tell you that the reality is that governance serves the companies very well and certainly serves investors very well. And one of the biggest concerns personally, and we haven't really talked about the ICO world, is we can debate all the benefits and pros and cons of the ICO world, but there is, one thing I think we'd all have to agree on is in its current state, there is a lack of governance there, and that lack of governance, I think, is an area personally that causes me some angst.
You're kind of leading right to where I was going to ask the next question is, you're building these companies in the public markets. You obviously did Onyx privately. The Onyx transaction itself, though, when you sold part of the business and then sold the second part, there was a couple of things that happened in between with the private equity group. No?
So that's half true and half not true. The reality is that Onyx was private. Onyx went public in 2000, right at the very, very, very peak of the dot-com marketplace. I guess I have the fortunate or unfortunate experiences of seeing what a blow-up looks like. So the quick story of Onyx is we did this, and we did this. In 2006 or whatever, when the kind of the capital markets were falling apart, I had a choice. I could either cry in my soup to see because we had a low share price, or I could take advantage of the opportunity that afforded, and we actually took it private back in 2000. Part of it private in 2006, and part of it private in 2009. And then we kind of put the companies back together again in 2009, and then did our private equity deal in 2011. So I have seen go public, go private, PE, and I think one of the running jokes is how many times have I ever sold Onyx? But
and so when you look at that whole process and the different steps, and then you were down in the Bahamas with me at PollyCon, what were some of the things that you're seeing in the ICOs that we were seeing presented and the different companies that people were talking about? What's working, what's not working?
Yeah. So I think my first observation from being down in the Bahamas conference, and also an observation I'd have here today, is before I went down to that particular conference, I expected it to be one giant frat party. All right, I expected there's going to be a lot of 20Xs, young 30Xs. The reality was, I don't know if it's a good thing or a bad thing, but as a reality is that there was a lot of gray hair at that conference, way more than I expected. And I think there's a little bit of gray hair at this particular conference as well. So it is starting to get, I think, part of it is a learning process. I think a lot of the gray hair is trying to catch up to what the millennials already know. Part of it is it's just a general maturing process that, people are realizing that maybe this is realer than they once thought it was. But I'd say that was one of the observations is it is starting to get, I don't know if this is what we would deem this to be mainstream, but it is kind of reaching a more mature audience is kind of paying attention to this space. So the other observation I guess I saw down there, so one thing I haven't mentioned today is I started a fund called the Ledger Group. And the Ledger Group we're going through a go public transaction shortly. And the purpose of the Ledger Group, I'll tell you the general thesis. Here's what we believe. And there's going to be a lot of people that are going to throw tomatoes at me, or if you add them, or just throw your coffee at me, and that's okay. Here's what we believe. We believe there's three ways of playing the blockchain crypto space. Number one is to don't play it at all. That would be a la, Warren Buffett and a bunch of other guys who believe whatever they believe. And that's fine. And they may be right and they may be wrong, and frankly, none of us at this point in time know the real answer. The other end of the spectrum are kind of, a little bit of the crypto crazies, right? They're buying every ICO, every mining company, everything that says blockchain in it, and they're buying iced tea companies that say blockchain, and frankly, I don't think they need guys like me, because you're all smart people that can go out through a bunch of mechanisms and buy every ICO out there, and it's not an issue. Our strategy is a little bit different. Our strategy is saying, we're kind of taking a bit of a middle ground. We will only invest in equity of real companies. So the company, first criteria is the company has to exist today. We have to like the company today. We have to like the space today. But we also have to like them in their current state. We have to love them with blockchain. So, we're not a blockchain fund per se. We invest in real companies that we think have a propensity to benefit most from the blockchain. And what we get in the form of consideration, so we give them money and we get back equity, but in addition to the equity that we get, we do demand part of the genesis block of their ICO, and we help them and fund them through the ICO process. But what we tell our investors is a very simple thing. We're kind of an ICO for optionality play. If these ICOs are highly, highly successful and they continue to be successful, then I tell investors we'll be the first ones to show up at your office and crack a champagne bottle and cheer us all on. But in that possible event that the ICO is not quite as successful as maybe we hope them all to be, we still own great equity in great companies. And great equity in great companies that are benefiting from the underlying blockchain technology. I will stand up here today and say that I'm blockchain bullish. But I'll also stand up today and say I'm somewhat cryptocurrency cautious, right? And that's only because there is just so much. There's a lot of great, and there's a ton of not so great. And trying to decipher between the great and the not so great is somewhat of a challenge. So anyway, that's our strategy, and so we think it's it gives certain investors an opportunity to get exposure to the blockchain sector, gives you opportunity to get exposure to the ICO marketplace, but it is an optionality play. And so we're not exactly a balls to the wall like some of the other funds that you're seeing on the street today.
Well, and one of the things I know you and I have talked about before is some of the ICOs that you truly believe to be successful are ones that are focused on the community aspect and the value of that token to a community versus the actual equity of building a business.
Yeah.
And so that's kind of a core theme there?
Yeah, so I mean, here's a few of my philosophies on ICOs. I mean, number one is, so I invest in early stage companies. And I can tell you this, if you're an early stage company with real revenue and a real product and real customers, you still have a very hard chance of succeeding because business is hard. Building businesses are really, 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 really hard. And so if you kind of factor that risk profile, and I think, VCs sort of talk about hitting 1 in 10 and, 1 in 10 winner and, whatever the right math is, you'll have a bunch of that go to zero. But the long and short of it is building businesses are very, very hard. And my belief is when you kind of take that up a notch and say, now I'm not really even investing necessarily in a business, I'm investing in a white paper that hopes to build a business, I think you take the risk profile up from being really, really, really hard, which it is. The VC world has not been, there's been a lot of carnage in the VC world, but you take it up, in my mind, you take it up on steroids when you're kind of investing at the ICO level. So that's one point. I think that didn't necessarily answer Brady's question. With respect to what Brady was saying, again, there are people that you're going to hear today that know a lot more about ICOs than I do. I'll be the first to admit that. But I think a fundamental tenet for ICOs, in my opinion, need to be that those ICOs need to serve a community. They need to feed an ecosystem. And I think that any ICO that is strictly to satisfy a company's requirement to go and build their software will likely fail. And likely should not be done as an ICO anyways. That is a classic equity type offering when you're raising money to build your software and build your solution. So if I were to invest in ICOs, which I do not, the ICOs that we would be looking at would be ICOs that we truly believe serve an ecosystem, that there are multiple participants, multiple companies, because frankly, if it doesn't do that, it'll get forked anyways, right? So you're gonna go down one route, think that they have the greatest thing since sliced bread, and someone determines that and they just fork the technology and use it for themselves. So you have to have something that is for the community, and the community says, you know what, I don't need to fork this because it is serving my needs as well as it's serving the needs of the companies around it.
Sure. Well, I know you and I can talk for hours, but with a room like this and such great attendance at FFCON, are there some questions? Because I think we've got a couple mics running around. And if not, we'll just keep talking. If anybody wants to put their hand up, a runner will come find you. But, oh, there we go. There's a question right here in the front.
How you doing? Kevin Moore, Canada's Crypto.
Hi.
I'm just wondering if you agree with me in saying that the hardest challenge ahead is educating people about this technology in the space. And once that happens, mass adoption will follow.
Yeah, so again, we have to sort of separate two things. We have to separate blockchain a little bit from the respective currencies or the coins or that come with it. I think, on the blockchain side of it, I'll tell you my belief and why one of the reasons I believe in blockchain. And again, I don't claim to be I did build a billion-dollar technology company, but I can barely turn on my printer at home. So, but here's, I do believe in, I kind of think at 100,000 feet, I guess, and if you take a look at the way computing has evolved over time, computing started off as a very centralized model, mainframe, service bureau type setup, so very centralized. And then you kind of went from, oh, that's not a good model. What we need to do is decentralize it with LANs, WANs, putting computing product down into your branches and so on and so forth. And for many, many, many years, and frankly, that was kind of the era that I built Onyx in, was a whole era of decentralized computing. And then lo and behold, you wake up one day and there's this thing called the cloud, and Amazons and Googles and Microsofts of the world, and to a small degree Onyx of the world. And all of a sudden it's, no, you don't want to run decentralized computing. Centralized computing is the way to go. Everything will be up in the cloud. It'll be a wonderful way to run. And you have all the security around that and blah, blah, blah. So, and then the notion of blockchain is really a notion back to decentralization. So if you kind of believe that nothing's, that there has been a cycle between centralized and decentralized computing, I believe that decentralized computing is for real, and it's very real, and it's going to change the way we do a lot of things, all of which are being talked about this morning and will be talked about later in the day. So that's that side of it. As it relates to the coins and the ICOs, I mean, I think the cream will rise to the top. There'll be a bunch of junk and the cream will rise to the top. But I do think that there is a reason, and there's a reason why there are some regulatory stuff around normal securities and continuous disclosure. Why as a public company do I have to disclose every 90 days my financial state, provide MD&A, blah, blah, all the stuff required as a public disclosure, specifically to address the retail. I mean, it's for my institutional investors and my retail, but I think the regulatory stuff is primarily to address the retail guys, because the institutional guys, will actually meet with you and so on and so forth. So why do I have that requirement as a public company, but I can issue an ICO and not tell you anything forever? Right? And you don't know how I'm doing. You don't know if I've run out of cash. I have lots of cash if my product is succeeding or product is failing. So again, there is a reason why some of the stuff is important, especially, I mean, one thing this may be changing slightly, but for all intents and purposes, these ICOs are a retail play. And again, there is some movement to more institutionalized play there, but there's no governance, no disclosure. There's a bunch of stuff. So when that stuff gets fixed, and it kind of has some of the same elements that a traditional security might have, then I think that will help a lot of people, right? Because right now, the way that people are getting, again, I'm not an expert, but I think the way that most people are gaining their information is by seeing, all the activity on Reddit and so on and so forth. And that is good, but there are probably some better, more advanced and maturing things that we should be doing.
Yeah, totally fair. We've got another question.
In the UK and other parts of the world, I'm in fintech industry or banking and insurance. There's a concept of open banking where a small startup can go in and access data from a big bank, for example, et cetera. And so I don't see much of that happening in Canada. They're talking about it a little bit. I think that would be a great way to push that industry forward in terms of, especially in the financial service industry. What's your thoughts on that?
Well, I think some of it is happening. So Interact recently, I don't know how recently, I'm going to say within the last 12 months, has opened up their rails, so they are public now. They are, I don't want to say unregulated, but they're open for other people to tap into their rails. So I think that's a very positive step towards that. I do think blockchain is good. I do think the notion of direct payment to payment and the lack of requirement for a trusted intermediary to participate in a transaction is a great idea and will be real, very real. I don't know if it's going to be real tomorrow, but it's going to be very real. And the one thing I also heard, I guess I heard in the presentation this morning that I really agree with, I wholeheartedly agree with, and that is if you're serving kind of the B2C can adapt to technology reasonably quickly, B2B cannot. I grew up in selling enterprise software and enterprise systems to big, large enterprises. And I remember the days when Ariba, I don't know if some of you are too young maybe for Ariba, but Ariba was the greatest thing since sliced bread. It automated the whole procurement and buying process for large enterprises, and they came out and went public, and the thing shot through the roof and was worth gazillions of dollars after they went public. Only to come back down again on the basis that although the technology was great and it had great attributes for the enterprises, the reality is that enterprises could not adapt or adopt nearly as quick as the technology was available. I would say, maybe it took them 10 years, it wasn't 10 months to find their way into these large enterprises who are finally seeing the financial benefits associated with it. So, that's the thing, even when I look at, aside from blockchain, I'm not a huge investor in a lot of the enterprise software side, although when you build them, they're highly valuable, they're fantastic assets to own, but they're hard to build because enterprises are typically relatively slow in bringing on these technologies, and the cost of acquiring those customers are very, very high.
Fair, very fair. I see red numbers, so we might be out of time. Craig, do we got time for one more question?
Maybe. Can I squeeze it in? Is that okay?
Sure.
What do you think are the most compelling use cases for blockchain? Like, where are you investing?
So I saw the slide that was up there before, and I agree on all those. Personally, I can kind of speak with my wallet and say that we've invested in some esports and esports gaming. We like the esports space. We like it for a few reasons. Number one, we like the demographics. Are typically the same demographics are the people that are buying some of these cryptocurrencies and ICOs. So I like it because esports is big and going to be bigger. I like it because they're in the gaming space and the gaming is big and going to be bigger. And to be perfectly honest, I like it because their client base is in Asia for the most part, and it's young. So it's the same demographics that are buying these ICOs. And I do believe that their particular business, with the way we're planning their particular ICO, we're going to put equity in because that's going to be how they build their business, but the ICO will be how they're going to build their community. And so we do like that. I kind of the direct answers, I like the esports space a lot for this space.
Right on. I think that's it.
All right.
Sheldon, thanks very much for your time. Sir, always fun.